Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Ambarella.
If you find our talks useful, please consider subscribe, like, and comment underneath. Before we actually get into the core of today's analysis, just imagine a scenario for a moment.
Okay, I'm picturing it.
So you're sitting in a self-driving car, right? Cruising down the highway at like 70 miles per hour.
Right.
And suddenly, out of nowhere, a deer jumps into the road. Now, if the computer inside your car has to beam that video feed to some massive cloud server, like 1,000 miles away.
Oh, to process the image and send the command back?
Exactly. If you have to wait for that giant data center to beam the hit the brakes command back to your car, the accident has already happened.
Yeah, you've already hit the deer.
Right. That milliseconds-long latency delay is, well, it's a literal roadblock for modern technology.
It really is.
And fixing that exact delay is quietly becoming one of the most lucrative markets in the whole hardware space.
Which is exactly why we're talking about Ambarella today.
Yes, trading under the ticker AMBA. They just secured a massive $800 million deal with the Hanwha Group to solve this exact problem.
Proving that you can actually win incredibly big in artificial intelligence without trying to fight the trillion-dollar tech giants directly in the cloud.
Exactly.
And before we unpack exactly how Ambarella is cornering this market, I do want to mention a really useful chart tool for investors and traders listening.
Yeah, definitely.
Because if you're looking for help reading trading charts more clearly, you can check out VIP Algos through the link below in the description.
It's a great tool.
It really is. VIP Algos is a TradingView indicator suite that shows visual buy and sell chart alerts, trend direction tools, support and resistance zones, and even take profit and stop loss planning areas.
Right, and it works across all sorts of markets: stocks, forex, crypto, gold, indices, futures, you name it.
Exactly. But just remember, VIP Algos is an educational chart analysis tool only. It is not financial advice, it does not place trades for you, and it absolutely does not guarantee profits.
Trading always involves risk.
It does, so always manage your risk and do your own research.
Yeah.
And just full disclosure, this is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
All right, let's move into the wealth building context.
Yeah.
Because from a portfolio construction standpoint, it is incredibly easy for you as an investor to just get tunnel vision right now.
Oh, totally. You glance at the financial media and everyone is just like piling into the exact same 3 or 4 mega cap semiconductor names.
Right, the ones building the giant data centers. It really makes you wonder how a smaller player like Ambarella even fits into a long-term growth and transition strategy.
I mean, it's a fair question.
So I have to play the skeptic right out of the gate here. With hundreds of billions of dollars pouring into cloud infrastructure to train these massive AI models, why should you care about edge devices at all?
You're wondering if the data center is where the real wealth generation is locked in.
Exactly. Isn't that where all the money is?
Well, the data center is where the heavy lifting happens, sure, but it's not the entire ecosystem.
Oh.
And understanding that distinction is, like, crucial for your long-term portfolio thinking.
Break that down for us a bit.
Okay, think of the artificial intelligence ecosystem, like the human nervous system. Those massive data centers are the brain.
Capable of really deep, complex thought.
Right, exactly.
Mm-hmm.
But your brain is not what instantly pulls your hand away from a hot stove.
Oh, that's true. That's a reflex.
Exactly. That reflex happens locally at the edge of your nervous system to save time and prevent damage.
I like that analogy. Let me take it a step further, actually. We are basically talking about the difference between studying for an exam and actually taking the test.
Oh, I love that.
Right. Training the AI on 1 trillion data points takes a massive warehouse of servers. That is the studying phase.
Yeah, sitting in the library cramming.
But what Ambarella does is called inference. It's applying that knowledge in the real world instantly. Like a security camera identifying a trespasser in real time, taking the test happens out in the wild.
That is a perfect way to visualize it. And the technical hurdle of taking that test out in the wild is just massive.
Because of the power constraints.
Power constraints and just the sheer amount of data. Devices at the edge, like security cameras, self-driving cars, robotics, they require what we call multimodal sensor fusion.
Multimodal sensor fusion. Okay, what does that mean in plain English?
So a sophisticated autonomous drone doesn't just look at a normal video feed, right?
Yeah.
It has to process LiDAR for depth, standard high-definition video, 4D radar, and near-infrared thermal imaging, literally all at the exact same time.
Wow, okay, that is a lot of data to crunch.
Right, and the catch is that these devices have to run on extremely low power. You simply cannot jam a power-hungry data center-grade processor inside a battery-operated security camera mounted on a pole somewhere,
It would probably just melt the plastic casing.
or drain the battery in 5 minutes.
So the core constraint isn't just about having enough computing horsepower, it's literally a battle against thermal limits and battery life.
And that specific battleground is where Ambarella has excavated this incredibly deep, competitive moat.
How so?
They engineered a proprietary AI acceleration architecture called CV Flow. It is custom designed from the ground up to dominate this specific niche.
So it's low power but high performance.
Exactly. CV Flow delivers high-performance AI inference while barely sipping power. Ambarella isn't trying to beat the mega caps at building massive data centers. They're simply dominating the hardware at the edge, where the mega caps chips are just way too hot and too power-hungry to even function. That gives us the bigger picture. Now let's look at the fundamentals. Because, a fascinating hardware story is completely useless to your portfolio if the numbers don't actually validate the narrative.
Yeah, the math has to back up the story.
Always. And looking at Ambarella's revenue trajectory, the shift toward these higher-priced AI inference processors is undeniably working.
What are the numbers looking like?
Well, for their Q1 2027, which actually ended in April 2026, revenue hit $100.4 million. That represents a 16.9% year-over-year increase.
Okay, steady growth.
Yeah, and zooming out to their full fiscal year 2026, revenue came in at $390.7 million, up a massive 37.2%.
Okay, let me pause you on those numbers, though. Because while the top-line growth sounds fantastic, the underlying profitability metrics are flashing some warning signs for me.
You're looking at the margins.
Yeah. If revenue is surging nearly 40% annually, why did their gross margins actually slip down to 58.4%?
It's a fair point.
And perhaps more concerning, their Q1 operating cash flow was a negative $25.6 million. I know hardware is capital intensive, but growing revenue while simultaneously burning that much cash usually demands a closer look from a cautious investor.
You are absolutely right to scrutinize those metrics. But if we pull back the lens a bit, these are classic transitionary growing pains, not a structural failure of the business model.
Okay, defend the margin slip first.
Sure. So building a semiconductor is one of the most complex manufacturing processes on Earth, right? And Ambarella is currently shifting its production to more advanced process nodes.
Break that down for us. What exactly does shifting to an advanced process node entail, and why does it eat into the profit margin?
Right. So in semiconductor manufacturing, a node refers to the size of the microscopic transistors on the chip, usually measured in nanometers.
Like incredibly small.
Microscopic. And when you shrink those transistors down to a smaller, more advanced nanometer scale, the electrons literally have less distance to travel.
Which saves energy.
Yes. That is the secret to reducing power consumption and heat while maintaining speed, which is exactly what their CV flow architecture needs to function.
But I'm guessing retooling a factory to do that is not cheap.
It's astronomically expensive. Retooling the fabrication equipment to print at that atomic scale requires a massive upfront financial commitment. It artificially compresses your profit margins temporarily because the initial manufacturing costs are so much higher until you achieve massive scale.
Okay, so it's a necessary upfront capital expenditure to secure a long-term technological advantage. I get that. But what about that $25.6 million cash drain in the first quarter?
Ah, right. So that negative operating cash flow wasn't money lost to operational inefficiency or just keeping the lights on. That was a highly strategic inventory build.
Wait, they were just buying up stock.
Exactly. They are deliberately hoarding raw materials and finished chips to meet the anticipated future demand for edge AI. In the tech hardware world, you cannot sell a chip that you don't actually have sitting in the warehouse.
Ah, and with that massive $800 million Hanwha deal officially on the books, Ambarella has to guarantee they can physically deliver the product.
Precisely. They have to have the chips ready to ship.
So they are paying out of pocket to stock the shelves ahead of a major global rollout. And I imagine their balance sheet allows them that flexibility.
It absolutely does. They are operating from a financial fortress right now.
Really? Let's hear it.
As of April 2026, Ambarella held $277.8 million in cash and marketable securities with zero debt.
Zero debt. Wow.
Having zero debt in a high interest rate environment is a supreme luxury. It means they aren't forced to go begging to the credit markets, paying exorbitant interest rates to fund this massive inventory build.
That is a huge advantage.
And to put an exclamation point on their internal confidence, the board of directors just authorized a new $50 million share repurchase program.
Oh, wow. Yeah, management teams do not buy back their own stock if they are secretly terrified about their cash burn rate. That gives us the business picture. Now let's move to the catalyst timeline. What are the specific upcoming events that could actually force the market to reprice this stock?
Well, the most immediate hurdle on the calendar is their Q2 2027 earnings, which should arrive in late August or early September.
Right, and the broader market is going to be watching the top line very closely to see if that Hanwha deal is finally translating into hard revenue.
Yes, the market always wants proof of execution, but there is a very specific, somewhat hidden driver hitting the bottom line in Q2 that you really need to be aware of.
Hidden driver, what is it?
Ambarella is expecting a $9 million reduction in their research and development expenses due to a terminated development project.
I admit that sounds entirely backwards to me. Slashing research and development spending at a high-tech growth company usually signals a company in retreat. Why is abandoning a dead project going to act as a catalyst?
Because of how it actually impacts the quarterly earnings report. By eliminating that $9 million in overhead, it is going to artificially boost their near-term operating results.
I see.
When the earnings hit the wire, the algorithms and the headline readers will likely see a massive earnings beat. But as an investor looking under the hood, you need to recognize that this specific profit bump isn't coming from selling more CV flow chips.
It's simply a cost-cutting measure.
Exactly. It improves their cash flow, but it is a one-time accounting adjustment, not a permanent new revenue stream.
Let's pan out to the broader macroeconomic environment for a second, because we don't invest in a vacuum. Are there larger global forces that could act as a tailwind for Ambarella right now?
There is a significant macro driver centered around geopolitical optimism right now. We are seeing growing hopes of a resolution, or at least a sustained de-escalation in the Middle East conflict.
And how does that affect a semiconductor company in California?
Historically, when global geopolitical tension eases, it assuages the market's fears around supply chain disruptions and subsequent inflation.
Oh, right, because oil and shipping lanes stabilize.
Exactly. And when inflation fears cool off, the threat of interest rate hikes diminishes. And when the threat of rate hikes disappears, institutional capital historically flows aggressively back into growth-oriented technology and semiconductor stocks.
I have to challenge the timing on this, though. Given that the stock already popped violently on the Hanwha news, are these upcoming catalysts, the Q2 earnings, the geopolitical tailwinds, already fully digested and priced in by Wall Street?
That's the big question, isn't it?
Yeah, is there genuine runway left for the specific earnings window to deliver an upside surprise?
It is the eternal dilemma for investors. The initial shock and awe of the $800 million deal is certainly priced into the stock. But the seamless execution of that deal quarter after sequential quarter is not.
So it's a show-me phase right now.
It's entirely a show-me phase.
Yeah.
If they can step up in Q2 and prove they are delivering on this massive contract while simultaneously defending that 58% gross margin through the advanced node transition,
Then what?
then there is substantial runway. Wall Street analysts will basically be forced to revise their valuation models upward. Catalysts tell us what could change the story. Now let's pivot to the chart, because the technical price action is laying out a very compelling structural narrative of its own right now.
What are you seeing on the charts?
Right after the announcement of that Hanwha deal and their favorable forward guidance, the stock experienced a sharp 9.8% upward surge.
Right, a nice gap up.
But zooming out, this isn't just a sudden isolated spike. Over the trailing 12 months heading into 2026, the shares have steadily climbed roughly 25%.
Okay, so we are looking at a sustained multi-month uptrend. But I have to ask the hard question regarding this momentum. Is this chart structure actually being built by fundamental conviction in Ambarella's specific technology, or are they just catching a thermal updraft from the broader semiconductor rally?
Because right now, everything AI is up.
Exactly. Any company with the letters A and I in their press release is flying right now.
It's natural to suspect a sympathy rally, but the chart structure indicates something much more concrete. The stock is currently in a defined breakout state, characterized by a clear pattern of higher highs and higher lows.
A staircase pattern.
Yes. And in technical analysis, that specific staircase pattern is the classic hallmark of institutional accumulation. The trading volume is heavily supported right now, and a lot of that flow is coming from a recent roadshow hosted by KeyBank.
Ah, okay. When a major financial institution like KeyBank takes a company's management team on tour to meet privately with massive institutional clients, it draws highly focused, high-conviction capital to the stock.
Exactly. It's smart money moving in.
So the chart gives us price structure. But what does market sentiment look like? Because a great chart can break down overnight if the broader narrative sours.
The company-specific sentiment is strengthening significantly on its own merits. The overall market narrative surrounding Ambarella is firmly transitioning to bullish.
Driven mostly by the Hanwha deal.
That $800 million agreement served as the ultimate validation. Yeah, it proved to the skeptics that their CV flow technology actually works at an industrial scale. And to back that up, Ambarella recently presented at the Bank of America Global Technology Conference and dropped a pretty staggering statistic.
Oh, what was it?
They confirmed they've officially shipped over 46 million edge AI chips to date.
Wow, 46 million units is a massive installed base. It pulls the entire company out of the realm of theoretical next-generation promises and plants them firmly in proven, real-world deployment.
It completely rewires how institutional money perceives the risk profile. But the sentiment gets even more intriguing on the speculative flow side.
Okay, speculative flow. What are the rumors?
There is a rapidly growing rumor, unconfirmed by the company but heavily debated in industry circles right now, regarding their third-generation CV flow architecture. The rumors suggest that Gen 3 is being heavily adopted in the AMR's space.
AMRs.
Autonomous mobile robots.
Are we talking about the sophisticated robots that navigate Amazon warehouses or map out advanced manufacturing floors?
Yes, those exact robots. And the technology required to run those robots is shifting. They are increasingly relying on transformer-based AI models to navigate dynamically.
Remind me, how is a transformer model different from standard AI?
Think of standard AI as reading a sentence word by word. A transformer model, however, reads the entire paragraph at once, understanding the context of everything simultaneously.
That sounds incredibly powerful for a robot that needs to instantly map a chaotic room.
It is, but processing that much data simultaneously requires a staggering amount of computational memory, which usually generates massive heat. And remember, these robots run on batteries.
Ah, so we are back to the heat and power problem.
Exactly. Ambarella's Gen 3 chips are supposedly highly optimized to run these heavy transformer models without draining the battery in an hour. If they are quietly securing major design wins in the industrial robotics sector, that opens up an entirely new, multi-billion-dollar addressable market for them.
I hear the excitement, but let's take a breath. Don't unconfirmed robotics rumors make the current valuation a bit too frothy? The robotics sector is notoriously difficult to scale commercially.
It really is.
So are investors getting ahead of themselves based on adoption that might be years away?
Speculation can absolutely inflate a premium, which is a valid concern. However, if we look at insider actions, it tells a highly confident story.
You mean the buyback?
Exactly. Again, the board of directors would not have authorized a $50 million share repurchase program if they fundamentally believed the stock was currently overvalued due to retail hype. Insiders aggressively buying back their own stock is the ultimate signal that they believe the internal, unannounced pipeline of business makes the current share price look entirely too cheap. That sentiment picture is useful, but we still need to talk about the risks. No growth story, no matter how technologically advanced, is immune to a downside shock.
Bro, and there is one glaring metric in this research that really demands your attention as an investor.
Yes, there is.
It is a massive red flag regarding customer concentration. In Q1 2027, an astonishing 61% of Ambarella's total revenue flowed through one single distributor, WT Microelectronics.
61%.
Let's just sit with that number for a second. 61% of revenue tied to a single entity. That is the literal definition of a single point of failure.
It's a huge vulnerability.
If WT Microelectronics suddenly experiences an internal liquidity crisis or gets caught in a massive logistical bottleneck across the Pacific, Ambarella's revenue pipeline essentially gets crimped at the valve, no matter how phenomenal their microchips are.
Now, to be fair, in the semiconductor industry, utilizing massive global distributors is fairly standard practice to manage complex overseas logistics. So WT Microelectronics isn't necessarily the final end user installing all those chips into cameras. They are the logistical middleman.
Sure, but my point remains, if that middleman stumbles, Ambarella's cash flow gets choked off instantly.
Your assessment is entirely accurate. If they stumble, it's a huge problem. And that ties directly back into the massive $25.6 million inventory buildup we discussed earlier.
It does, and this brings us to the margin and inventory risk. We framed that cash outflow as a strategic inventory build, which it is, assuming the end demand actually materializes.
Right. But if the demand for edge AI cools down, perhaps due to a macro recession or a delay in that robotics adoption we just talked about, that massive warehouse of chips quickly morphs into a toxic liability.
Because technology hardware ages like milk.
It really does. If those highly specialized chips sit on the shelf too long, Ambarella will be forced to take heavy financial write-downs. That would absolutely obliterate their profit margins and likely send the stock tumbling.
Yeah. Their pristine cash position gives them a solid buffer to weather a storm, but it does not make them bulletproof against execution failures. So with everything on the table, what's the final verdict?
Well, we are looking at a fascinating hardware company operating quietly in the shadow of the data center giants, carving out a highly defensible, incredibly difficult to replicate niche in edge AI.
Taking all the fundamental growth, the breakout chart momentum, and those very real customer concentration risks into account, the evaluative bullish score sits at an 8.
Which is really strong. To summarize the overarching narrative, Ambarella is proving that a company doesn't need to be NVIDIA to win in the artificial intelligence revolution.
Not at all.
They are successfully capitalizing on the transition to local edge computing, evidenced by their nearly 17% top-line growth and that massive $800 million Hanwha contract.
And they are navigating the incredibly expensive transition to smaller nanometer nodes with a true fortress balance sheet. I mean, holding nearly $280 million in cash with zero debt is incredible.
Furthermore, management is confident enough in their pipeline to execute a $50 million buyback while continuing to fund their proprietary CV flow architecture. The main upside driver for the stock remains the continued adoption of transformer models in low-power, high-compute devices like vehicles and industrial robotics.
Conversely, the primary risk is heavily tied to that 61% customer concentration and the severe potential for inventory write-downs if global demand falters.
Exactly.
But looking at the broader picture, the target horizon evaluated here is a multi-year outlook. We do not tell you what to buy, sell, or hold, but for investors looking for exposure to the next phase of AI hardware outside the crowded data center space, the structural setup here is incredibly compelling. As always, please remember that this analysis is for informational purposes and is not financial advice.
Absolutely.
And before we go, if you want a cleaner, more efficient way to read trading charts across all your devices, be sure to check out VIP Algos through the link below in the description.
It's such a helpful tool. VIP Algos is a TradingView indicator suite designed with visual buy and sell alerts, trend direction tools, support and resistance zones, and TPSL planning areas.
It can help make charts much easier to scan, but please remember it is still only an educational chart analysis tool. It is not financial advice, it does not automatically place trades for you, and it absolutely does not guarantee results.
Trading across any market involves risk, so always do your own research and manage your risk carefully.
And just a reminder, this is an affiliate link, and we may earn a commission at no extra cost to you.
And if this analysis helped you today, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua.
As you map out your tech investments for the next decade, consider this. With data privacy and cybersecurity regulations becoming increasingly strict worldwide, will we soon see a legal mandate where certain sensitive data like facial recognition or home security footage is prohibited from ever being transmitted to a cloud server?
Wow. If that happens?
Right. If local processing becomes not just a speed advantage, but a strict legal requirement to prevent cloud breaches, the edge might just become the center of the entire AI universe.